Phew. Now, who's got more money than Heather Mills McCartney put together? The answer? The Federal Reserve. That's America's central bank, the daddy of them all, the American lender of last resort. Now, for nearly 20 years, thanks to Alan Greenspan, the Fed lent money incredibly cheaply to Wall Street banks, who then went out and lent it to a wide range of other banks to stake on projects ranging from subprime mortgages to the winner of the 2:30 at Kentucky races. Now, unfortunately, while the winner romped home at Kentucky, a combination of bad debts and falling house prices led to losses of up to $1 trillion. That's $1 million, more than the combined total of Mohammed Al-Fayed's legal bill and Jonathan Ross's salary. To put that into context, as the crisis broke at the end of last year, the Wall Street banks, that's the guys in the middle of the crisis, handed their employees end-of-year bonuses amounting to only $37 million. That's $37,000 million, an average of just $200,000 each on top of their annual salary. Now, how does the Fed work? Well, if you or I borrow money and go bust, we have to take the consequences. But such is the sophistication and influence of the banks that if they lose a lot of money through their exposure to the dodgy mortgage-backed securities market, it's vitally important that the Fed, that's the Federal Reserve, the central bank, bails them out and says, bad luck, boys, here's some more cash, better luck next time. Why? Because otherwise, banks get cautious. The supply of money dries up and the whole thing goes pear-shaped. So, next time you're in Ladbrokes or Corals or the Tote, and they say your credit limit's expired, just ring 0800 Federal Reserve, quote, liquidity, and wait for the money to flow in. And remember, your house may be at risk if you fail to meet your payments. Unless you're a bank. Phew.
Finding it hard to get a mortgage? At MortgageMeltdowns.com, we have the pick of the very latest offers for first-time buyers, including startup fixed-rate variable, fixed for 20 minutes, then twice base rate for the next 70 years. Tracker First Time Plus tracks the Zimbabwean Retail Price Index, capped at 7,000% for first year, then tracks the Matabeleland Gumble Bean. Buy to Home Let Wrecker, available up to 37 times joint salary. Your family and pets may be required as guarantors and sold into slavery if you don't keep up repayments. Additional charges may be sprung on you from time to time. Excludes one-off administration fee of £50,000 and 2-year instant bonus gold. We instantly demand a bonus to be paid in gold, after which we refuse to let you switch to another lender unless you pay us in cash. But hurry, these offers won't last long, and if you miss them, you might never be able to buy a home of your own ever again. So there.